Good day, everyone. If you have been wondering what's going on with house prices around the country right now, you are not alone. Today, we are taking a clear, non jargon look at the latest numbers so you can understand what it means for buyers, sellers, renters, investors, and everyday Aussies. All figures come straight from Cotality's monthly housing chart pack for August 2026. Right now, the national picture is mixed. Over the past 3 months to July, Australian home values fell 1.9%. That's the first clear quarterly drop in a while. But looking back over a full year, values are still up 5.3%, which works out to be about extra $49,000 on the typical Australian home. The drop is mostly happening in the big cities. Combined capital city values are down 2.5% over the quarter, while the regions are basically flat, just 0.1% lower. Here is how the major capital cities are tracking. Sydney is leading the pullback, down 4% over the quarter and 2% over the year. Values are now 5.3% below their January 2026 peak. Melbourne is not far behind, down 3.4% quarterly and 2.8% annually. It's 5.5% of its earlier high. Brisbane, Adelaide, and Perth have only just started to soften. Brisbane is down 0.6% for the quarter, but still up a strong 14.8% over the year. Adelaide is almost flat for the quarter and up 10.5% annually. Perth is down a tiny 0.3% quarterly, yet up a cracking 20.5% over 12 months. Smaller capitals like Hobart, Darwin, and Canberra are holding up better, with Darwin actually still setting record highs. Interestingly, the cheaper end of the market is doing better than the expensive end. Lower quartile homes have risen 10.8% over the year, that's nationally, while the top end has barely moved, just 0.7%. So, what does this mean on the ground? For sellers, homes are taking a bit longer to sell. The national median time on the market is now 35 days, up from 32 last month. Auction clearance rates in the capitals have slipped below 50%, and vendors are offering bigger discounts, around 3.8 to 3.9% of the original asking price. Total listings are up nearly 15% on a year ago, so buyers have more choice. For buyers, conditions are slowly tipping in your favor, especially in Sydney and Melbourne. But remember, prices are still higher than a year ago in most places outside these two cities. For renters, the rental market is still tight. Rents are up 5.9% nationally over the year, faster than wage growth. Gross rental yields have edged up to 3.72%, the highest since 2023, which is good news if you are an investor, but keeps pressures on tenants unfortunately. Interest rates are also part of the story. The Reserve Bank held the cash rate at 4.35% in August after three earlier hikes this year. Variable mortgage rates for owner-occupier are now around 6.25%. That extra cost has already reduced borrowing power for the average household. And just to put the whole thing in perspective, Australian homes are still worth a massive $12.4 trillion and make up almost 57% of total household wealth. So, even with a soft patch, housing remains the biggest store of wealth for most of us. So, it's not all doom or gloom like the media's portraying at the moment. That's the snapshot for August 2026. Markets move in cycles, and right now we are seeing the first clear signs of broad downturn after a strong run, especially in Sydney and Melbourne. All the data and charts come from Cotality's monthly housing chart pack, August 2026 edition. If you want the full detail, you can check their website. Thanks for watching and all the best with whatever your next housing move is. See you next time.